This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Let's do example number 5. Different scenario here. Polly has trading income of $13,500, which is assessable in the tax year we're dealing with, 22-23, and has bank interest of $18,000. So let me get a clean page and we'll repeat the process. So this is Polly's income tax return, tax computation. And she has both non-savings and savings income. Okay, we're going to copy the question into the answer. So she has trade income of 13,500 and she has bank interest of 18,000. So total all that up. Then we will deduct her personal allowance from the non-savings income first. Again, let's do the maths. So this is her taxable income. That's the first half of the pro forma done, nice and neat, well presented. Okay, so now we need to work out her tax liability. She has non-savings of 930, which will be taxed at 20%. You always tax. Also, you noticed in all these computations there are no points, no decimal points. Always use round figures. If you have to round when you do a calculation, it doesn't really matter whether you round up or down. Normally the rule is if it's more than half, more than 0.5, then round up. If it's less, round down. But as long as you show all your workings, it doesn't matter. But no decimal points in any of this. I know in reality people pay tax in pennies as well as pounds. But in an exam, just round figures, please. You'll notice no decimal points and no. So when you set up your spreadsheet, you'll make sure that there's no decimals in there. Now, that's the non-savings income, which we always tax first. Savings income. Now, this 18,000 falls partly into that first 5,000. So we have 5,000, which is the first, the starting rate of 0%. But we've used 930 of it with the savings, the non-savings income, which leaves us with 4,070, and that's at 0%. Okay, that's the starting rate. Then, because she is a basic rate taxpayer, you've got the savings rate nil. Savings, I get that mixed up. Savings nil rate band. All these things at 0%. Okay, which means that after that, the balance of that, and again, safety net, 18,930 is the total that we're aiming for. Make sure you use your safety net, which means the balancing figure here is 12,930, and that's going to be taxed at 20% because she's a basic rate taxpayer, which is 2,586. giving us a total of 2,772. Okay, so that's example number 5. Now, example number 6. Daisy received a salary of 19,500. Pay as you earn was deducted £1,400. She also had bank interest, 10,000, and some dividend income. All right, some dividend income. So we've got to work out what her income tax liability is in this year. Okay, so I'm going to show you the answer and talk you through the answer rather than write it out this time. Sometimes it's easier to write it out, and sometimes it's better to show it to you so that you can see it clearly. And obviously you'll find these at the back. Again, make sure you put a heading in. Columns across the top, pro forma down the side. Nice, neat, well labelled. All right. Question said that Daisy had a salary of 19,000, so we've copied that, put it in the non-savings income column. It said that she also had £10,000 bank interest in the savings column. Bank interest. There, you can see it there. And dividend income. Okay. Total 30,500. Well labelled. Put the label in there. Total income. Deduct the personal allowance from the non-savings income first. That you're getting used to the idea of this first. Top slicing. We always do that first because it's the one that we tax first. Gives us taxable income total of 17,930, which is comprised of non-savings income of 6,930. So she's above that 5,000 limit, so that should be clicking in your head there. Savings income of 10,000, dividend income of 1,000. This kind of question is more likely to be a section C kind of question because there's a lot involved in this. You've got to put the income in the correct column, deduct the personal allowance, and then the tax computation is quite lengthy. So it could be more of a section C kind of question. But let's do it slowly, logically, and work it out. Always do them in the correct order. Non-savings, then savings, then dividends. Okay. So the savings income, there you go, 6,930 at 20%. Then savings income. Is this individual a basic rate taxpayer or a high rate taxpayer? Well, we can see the income's only 17,930, so therefore they are a basic rate taxpayer. So the savings nil rate band is 1,000 at 0%. The rest of that, see those two add up together to be 10,000. 9,000 is 20%. Now the dividends, you remember the rule? Dividends said that the first £2,000 of any dividend income was at 0%. That's the rule. Okay, the first 2,000. All right, this falls within that remit, and therefore £1,000 will be at 0%. Add them all together because that's the liability. But the question said, go back to the question, that she had pay as you earn. See there? £5,000 pay as you earn, which had been deducted at source. So that there. Oh, have I got the wrong question? Oh, that's example number 7. I do apologise. Where are we? There we go. No wonder it didn't make sense. £1,400. There you go. Pay as you. Takes to read the question carefully, doesn't it? Income tax liability of 3,186 less the tax deducted at source of 1,400 from the correct question, giving us an income tax liability that's payable of £1,786. Okay. Just a few notes at the bottom. Daisy has non-savings taxable income in excess of 5,000, so the starting rate is not applicable. She's a basic rate taxpayer, so the nil rate band is £1,000. She had less than £2,000 dividend income, so the dividend income nil rate band applies to that. Now, obviously, when you come to go through this chapter again yourself, because you'll need to do it again. You've watched me, you've listened to me, you've watched me do it. It's important that you go back over this chapter and do it again to revise it, to make sure that you fix these rules into your head. Okay, so that is example number 6. Now we're going to do example number 7. Okay, now we're going to do it. So we're going to recalculate good old Daisy. Daisy's income, okay. Salary now shot up. She's obviously had a new job. 37,500 with pay as you earn of 5,000. Bank deposit interest is 13. Dividend income remains at £1,000. Okay, let's have a look at what the answer says for this. Repeat, repeat, repeat. The more times you do this, the more the synapses are used, the more you'll become familiar with it. Make sure that you label it. Okay, good old label. Particularly in an exam, because you need to make sure the examiner can see clearly what it is that you're now answering. All the labels across the top, all columns, including the total column and the pro forma down the side. Copy the question into the answer. So she had employment income of 37,500, bank interest of 13,000, dividends of 1,000. We've added them all together, giving us a total of 51,500. Take off the personal allowance, which we do off the non-savings income first, giving us a taxable income of 24,930 non-savings, 13,000 savings, 1,000 dividends, £38,930. She's no longer basic rate. She's now a high rate taxpayer. Okay, she's a high rate taxpayer, which means her computation is going to look slightly different. So are you ready for this? So follow the same process. Okay, the non-savings income is taxed first at 20% because she's a basic rate taxpayer. Now her savings income, because she is now high rate, she only gets a savings nil rate band of 500. Okay, 0%. If you add all that up, comes to 37,700, and that's the point at which she then becomes high rate. So £12,270 is at 20%, and the balance of the savings income, 230, is now taxed at 40%, giving us £92. Dividends still under that 2,000, so the dividend nil rate band still applies. It doesn't matter at what rate you pay tax, you still get that, even if you're an additional rate taxpayer. Total tax liability of £7,532. Tax suffered at source. We'll get this right this time. You ready? £5,000. Okay, that's deducted at source. It goes in there, giving her a liability that's now payable of £2,532. And a few notes. The starting rate for savings income is not applicable because it's over 5,000. Daisy is a high rate taxpayer. She only gets a savings income nil rate band of 500, and dividends are less than 2,000, so she pays 0% on that. Excellent. So those are the 7 examples that deal with this. Okay, one final thing in this little bit of a section is the accrued income scheme. Okay, doesn't come up very often. Very rare in an exam, but you need to be aware of it. So in chapter 12, you will learn that gilt-edged securities, such as government securities, and qualifying corporate bonds are exempt from capital gains tax when they are sold. So without the accrued income scheme, in other words, what income has been accrued in that bond or stock in that period of time, if that wasn't there, they could avoid paying income tax on the interest that they receive, because normally it's paid every 6 months. Example, we've got an example here. 1st of July 2022, a taxpayer bought £120,000 of 2.5% Exchequer stock, which is a government security, at the cost of £125,000. Interest payable on a nominal value at twice a year. You see there, 30th of June, 31st of July. Sorry, 31st of December. On the 1st of December, they sold the stock for £127,000, including any income that had accrued since the 1st of July to the 1st of December. Now, it says the disposal is exempt for capital gains tax purposes. Okay, that's a rule. But there is accrued income between those two dates, from the 1st of July to the 1st of December. And it's treated as income and needs to be taxed therefore. Okay, so 120,000, can't read, £120,000 is the value of the nominal value of the Exchequer stock. That's how much percentage interest is given on that. And then you've got those 5 months from the 1st of July to the 1st of December. That's the income. Now the purchaser received £1,500 interest on the 31st of December, but will only pay tax on £250 because £1,250 is being assessed on the person who sold them. Doesn't come up very often. Something you need to be aware of.